everybody, here are the 5 questions that your lender does not want you to ask. All right, my name is Jonathan Federa. I'm the founder of Integrated Business Financing, and I've been in small business lending for the last 14, 15 years. I've helped countless business owners grow their business, and we've almost put out $1 billion into circulation. So here's the inside scoop. Here's what they don't want you to ask. And before we get into that, I want to make sure that if you stay to the end and you comment on this video, all you have to comment is cheat sheet, and I will give you this cheat sheet and breakdown for you. All right, so the first one is, what's the interest rate and what are the fees? Okay, most lenders have an introductory APR, and they can't tell you what the rate is for business financing up front until they know what your qualifications are. And if they do, a lot of times that's an introductory rate that you're probably not going to get. So when someone comes into us, we always tell them this is the range, right? Because you don't know what their credit is, you don't know their time in business, you don't know what their cash flow looks like. So there's a lot of different factors that come into play that is going to determine what rate you get and also what are the fees. So like a line of credit usually has a draw fee of anywhere from 1.5% to 3%. All right, that is standard. Okay, now if you're doing equipment financing has title and doc fees. That's normal. What you shouldn't be paying is like professional service fees, and most of the time that's like high interest, like working capital type of financing programs, all right? And usually that's from a broker. So I want to give you guys all this information so you can prepare yourselves when you need financing, all right? And also know this, the interest rate depends on what program you get. Invoice factoring is a different cost than an SBA loan. A term loan is a different cost than a line of credit, right? It all varies on how you score out and what you qualify for. The most important thing to look at when you're looking at a financing program is it going to help you grow? Is the money going to help you make you money, right? Is the payment less than the incoming revenue? And is the cost of the financing less than the money you're making using it? That's what matters. However, there are questions that you should know going into it and asking the lender, and that's what we're going over right now. So the next one, is this a fixed or is this a variable program? Here's the example. Okay, with SBA loans right now, we've been doing a lot of flash cap programs for our clients. They're quick, they're fast, and they don't need as much documentation. On those, it's a variable rate. So 3 weeks ago, the rate was 6.75% over 10 years. Now today, since they just raised interest rates, okay, where at the end of July, they just raised interest rates, that went up to 7.5%. Same thing with equipment. We just got a notification from our underwriters that equipment financing went up slightly to adjust for the rates, okay, and the increase, and that's because of inflation. Now, the other program they have is simple interest, right? So lines of credit are typically simple interest. All that means is if you borrow $100,000 at 6% over 12 months, you're gonna pay back $106,000 unless you pay it back early. Okay, now that can be misleading. I'll give you guys a great example of that, all right? The example is, I worked with a client to get him equipment financing, and he said he had a rate of 3.5%. That was their introductory rate. Well, when I looked into that program he was talking about, I found out that he was using simple interest, and because he was calculating it over, let's say 5 or 6 years, it was really a rate of 19%. So these are the questions that you have to ask. Is it simple? Is it fixed? Is it variable? All right, because most equipment financing, almost all equipment financing, is always going to be a fixed interest rate, usually over 3 to 6 years. All right, next, how long does the process take? Okay, when you walk into a bank, they don't want to tell you that, hey, they're backed up, or hey, this is going to take 30, 60, 90 days. And a lot of times that time delay can cost your business opportunities. All right, so the idea is a bank is not truly aligned, right? There's no one incentivized to get your loan done, to get your financing done. And a lot of times they only have 1 or 2 programs. Each program works differently and independently. A term loan is 3 to 5 days. A line of credit can be done in 24 to 48 hours. Equipment financing, 24 to 48 hours. An SBA flash cap, that can take 14 days. A traditional SBA can take 30 to 90 days. All right, so these are all things that you have to factor in, and a lot of times your lender doesn't want to tell you these answers, and it can cost you money. Next, what are the requirements? All right, a lot of people just want to get the application in. If they're not telling you and they're not being specific about the requirements from a credit standpoint, a time and business standpoint, a profitability standpoint, okay, that's a problem. Why is that a problem? Because it probably means you don't have a great shot at getting approved. All right, you need to know the requirements, and the requirements are different for each and every program. All right, and that leads me to the next question, which 95% of the people or the banks you go to or the brokers you go to will struggle to tell you. Is this program right for my business and what I'm trying to accomplish? Here's why. You can't build a house with just a hammer. You can't have a stable business that is growing with just a loan. All right, there's many different programs out there. So for someone that is billing, let's say net 30 or net 60, all right, and it's business to business, and you're having trouble keeping up with cash flow because they're growing so much, that should be invoice factoring. If a business is having trouble constantly getting in inventory and they need to be able to access cash, okay, for short-term needs, that should be a line of credit. If a business isn't really qualified for a line of credit and they still need that, that could be working capital. And then if you're trying to buy a business or you're trying to consolidate debt or you're trying to start a franchise, that should be an SBA loan. All right, and then anytime you're trying to buy equipment, it should be equipment financing. Okay, that's why I'm saying most banks and most lenders, most brokers do not have the solutions that the average business owner needs. All right, and a business owner needs that guidance. You need that guidance when you're trying to apply. Okay, because if you get the right programs set, growth is easy, stability is easy. It makes your job much easier to grow your business and to support your team. So if you guys have questions, feel free to comment, feel free to reach out, and if you're ready to apply for anything we just went over, please hit apply in the comments section and we will reach out to you. I hope you took down notes. Don't forget, make sure you write guide so I can get you the guide absolutely free. It'll have everything we just went over in more depth. And if you need our help, just type I'm ready to get the financing today, or I'm ready, and we will reach out to you and personally help you get the equipment that you need to grow your business as seamlessly and painlessly as possible. And we will make sure that we get you into the best terms you possibly qualify for. Thanks for watching.